We start with a sharp late-day sell-off that ended the market's win streak in a big way. The Dow dropping 476 points, with everyone down on the session. It was its worst percentage loss since way back on October 3rd. And all that after the index had notched a new intraday record earlier in the day. Meanwhile, the S&P and NASDAQ both falling about 1.5%, all three now in the red for the week, putting them in danger of snapping a 7-week run of winning performance. Every S&P sector lower on the day. Consumer staples, energy, discretionary, biggest losers there. And take a look at Treasuries. The yield on the 10-year dropped as low as 3.85%. That's the lowest it has been since late July. So was all this action just a little profit taking after the run we've had, or is there more maybe trouble brewing under the surface here? Guy Adami, what do you think? Is there anything to really worry about here?
Well, I mean, I've been worried incorrectly for a while, so I'm probably the wrong person to ask. But Steve, Karen, Julie, all been bullish. I'll say this. One of the things, many things that have concerned me about this market are these 0-day till expiry options, which when things going higher, nobody seems to care. But when things going lower, everybody starts to point the finger at. And volatility is a great thing when you're shorting and getting paid, but it also works against you. And around 2:30 today, something clearly happened. But when you have it happen on a day where we make a new 52-week high, we test the all-time highs effectively in the S&P and reverse the way we did, even if you're the most bullish person in the world, you have to take notice of today's price action.
I was on the air at 2:30 today. It was nothing I said. I promise you. I promise you. Steve, what do you think?
Yeah, so I did take notice of it today. But if you look at it, rates have been falling. I think that's a tailwind for the markets. We're coming up to year end. We've had such outsized rally and such a run up that you would I don't want to say you'd be crazy not to lock in a little bit of profit. But I think once somebody sells, everyone else has an itchy trigger finger. I think that it just spirals out of control. So I do agree with Guy. I think it could have been options related. There were a couple of Taiwan headlines around there, just rumors. But if you want a reason to sell, you could find 10 of them.
Yeah. Julie, was there a predicating event here today that you can identify for why the market turned a tail the way it did at 2:30?
No, I don't think so. It's hard to really point to anything, and I'm not sophisticated enough to pick up on these micro movements. But what I will say is, you've seen a clear revaluation in the market that's related to interest rates. And what is going to have to take us from here is earnings and fundamentals are actually going to be what propel the market forward. We've already kind of seen the benefits of lower interest rates, and now the hard work of fundamentals has to take place in order for us to keep pushing higher.
And how do you evaluate those fundamentals? What do you think's in the cards?
Well, I think the most important point is if we continue to see good, strong employment, then the consumer remains healthy, and then most of our economy is okay. But I think the sectors that are showing some weakness, in consumer, it's really a function of, are you creating value for your customers? And so in the old days of the pandemic, when we didn't have anywhere to spend our money and we were looking for dopamine, we would buy literally anything. I could sell macrame for all I cared. But now you really have to provide value for your customers. And that's true even on the business sector, too. Value is really important to people in an inflationary environment, even as prices soften.
Karen, it was some consumer staples that took hits today. General Mills among them, FedEx, not a consumer staple, but a transport. What are you seeing?
Well, it's interesting. It's a big move, clearly, within a couple of hours, or an hour and a half, really. And if you step back a little bit, it just takes us to where we were Friday around lunchtime. So it's not that giant in the scheme of things. However, it's a very precipitous move. Normally, when you see something like that, you hear rumors, and then you hear something more solid than rumors. We don't have that yet. We were talking in the green room. Do we have anything really specific to point to? No. So a lot of what the guy's been saying, just is it, stops or just momentum, and people think, all right, that's it, the rally's over. Look, I'm always long, so I'm going to be long into this. I'm going to be long after this fall. I think that just out of steam, maybe, although I thought it would last until year end because I think there's a lot of chasing going on just to sort of, performance was ahead of most managers. I don't have a great reason to explain it.
Nobody really seems to. I mean, I think we're kind of flummoxed here. Steve, you mentioned a moment ago some chatter on Taiwan that has kind of been in the ether on and off. concerns about what Xi's ultimate objectives are there? He's been pretty transparent about what they are.
He's been very transparent about it. And just to probably make a finer point on it, I think this is a one-day event. I think we're going to have that get back on the bull for the rest of the year. I think people won't be afraid to rally probably into year end. I think this market's going to be tested somewhere in January. Earnings have bottomed for me. People, as what Julie said, people have jobs. People are going to be spending money. I think the economy is okay. The market will be tested sometime in January.